Hey, what's going on, guys? This is Greg from Ideal Trading Ideas, and as you can see, we have the Azul Airlines website up on the screen. This is Investors Relations, right? We're going to go through it real quick. This is about Azul, corporate governance, investors information, news and presentation, shares, and investor services. So this is going to be my trade idea number 16, and then you can just go through this website and kind of scroll through at the different stuff that they have going on. So this is going to be the US price. This is the other price for like Brazilians. And then we have the volume, so on and so forth. Obviously, sustainability report, Form 20F, spreadsheets, video results. They have different newses, results, events, so on and so forth. If you want to be part of their mailing addresses, obviously put your name and your email in, and you'll get information about investing in Azul or what's going on in the company in itself. So we're going to go ahead and move on to our Robinhood portfolio. As you can see, it's valued at $9,789.07. So for the day, we're up $12.26 or positive 0.13%. And after hours, we're up $29.58 or positive 0.30%, right? We're gonna just show you the weekly chart real quick, show you exactly what's going on, right? So over the past week, we're down $299.28 or negative 2.97%, right? We had a high of about $275 on June 25th. And as the time went on, as you can see, the price dropped down. The low was right around June 29th at about $9,600 or negative $406, right? So we recovered just a little bit. You can see right there that we're recovering. But right now, our buying power is pretty low, $70.63, right? We have a slew of option contracts and covered calls and so on and so forth, right? So what we want to do is, once again, talk about Azul.
I think he's trying to say something to me.
So in the search part or bar, we're going to go ahead and type in Azul, and that's going to pop up Azul Airlines. We're going to go ahead and click on that. And right now, we see that Azul Airlines is valued at $26.51 a share, right? It's down 42 cents or negative 1.57% for the day. And then after hours is up 11 cents or positive 0.42%, right? We're going to go through the chart really quick. 1 week chart is down $2.55 or negative 8.77%. 1 month chart says that we're up $1.15 or positive 4.53%. 3 month chart says that we're up $6.08 or positive 29.76%. 1 year chart says that we're at $15.15 or positive 133.36%. And the 5 year chart says that we're at $4.51 or positive 20.50%, right? So overall, in the 5 years time frame, Azul is up 20+%. Now we're going to go over here to our average. So our average cost is $6.68. We only own 20 shares of this particular stock, and our portfolio diversity is 7.05%, right? Current market value for those 20 shares is $530.20, and today's value is negative $6.20 or negative 1.16%. Total return is $396.60 or positive 296.86%, right? So most people are probably wondering why I only have 20 shares, right? So we're going to take you back in time. Short story real quick, just to say that, hey, back then, maybe 2020, when we picked up these shares at $6.68, we weren't really thinking about holding on to Azul for the long term, or for the most part, we weren't thinking about holding on to any of the shares that we picked up for a long term, right? We had more of a trader's mentality, and we were thinking about picking up, like I said, 20 shares. We were doing onesie twosies on about 15 to 20 different companies. I want to say in 2020, I went through about 45 different companies, right? And we're picking up 10 shares here, 5 shares there. And as we sold those shares off, we noticed that the companies, the share price was exploding.
Oh my God, ladies and gentlemen, this is amazing.
So we would sell off at, a $2 increase in, over a 6-month time frame or a 3-month time frame after I had sold, and I go back to check on that stock and it would be up by $10 or something like that. So we decided to hold on to our shares of Azul as we watched the price move up, right? So at that point, we just weren't in the mindset to purchase 100 shares or more of Azul. So that's the reason why we don't have at least 100 shares, right? And that goes for quite a few of the companies that I own, minus the ones that I picked up in 2020 or some that I picked up in late 2020 and early 2021. That's how we've been moving now, buying 100 shares or more so that we can do our covered call contracts, right? So what we're going to do is show you guys how to do a covered call contract in my trade idea number 16, right? So anybody that owns shares of Azul right now or thinking about buying shares of Azul right now at the current price, I personally feel like this still is a great price, right? You can actually look back a week ago and you can see that, hey, there's an 8% drop. So it's going to be a nice time for you guys that are even think about getting inside of Azul to just go ahead and purchase the 100 shares, right? It's going to cost you $2,600, obviously, to buy those 100 shares. But hey, just take a look at that 5 year. You already know that Azul, at the height of its day was $44. That was January 2020, before the pandemic, right? Even if you go back into 2019, August, it was trading at $34. If you go back into May of 2019, it's $23. Just looking at how it's performing in 2018, even in 2019, 2018 is $23, so on and so forth. So personally, I believe that we're going to see Azul make it up to that $30, $35 range. Even going back to April 2018, we see it at $34. So personally, I believe we're going to see Azul in that higher area, right? I definitely don't believe that it's done growing. $30, $35 stock easily, in my opinion, right? So for those of you who already own the shares, whether it be at my area, $6.68 or higher, or even lower, hey, how do you make money from owning these shares, right? If you just don't want to hold the shares and wait for the price to go up, you're gonna go ahead and click on Trade Azul Options, and then here's the price, $26.51, down a negative 1.16%, right? You're gonna change that buy to a sell, and then you're gonna make sure you have call clicked on, right? This is the expiration date, expiring July 16th, and the strike prices right here are the prices you're saying that you're willing to sell your shares at, right? By this particular expiration, which is July 16th, and this area right here that says price is the premium that is going to be paid to you per share, right? So one contract is going to be equal to 100 shares, right? So if you buy one contract, it's going to equal 100 shares. So that's going to be 15 cents times 100 shares, right? Which is going to be $15. So if you bought shares at, let's say, $25 to $30 is going to be a $5 difference, right? $5 times 100 shares is going to be $500, which means you're going to have a $500 profit, plus the 15 cent or $15 that they're going to be paying you up front. 15 cent times 100 shares is going to be $15, which means you're going to have a total profit of $515. Now, do I recommend going ahead and doing the July 16 contract? That's up to you. Personally, I would just go ahead and move past July 16th and pick the August 20th expiration for contracts, right? Still go with the $30 mix because I don't think Azul is going to go from $26.51 to $30 by August 20th. And they're willing to give you 75 cents or $75 up front for saying that you'll sell at $30, right? So once again, if you own at 25 and you went from 25 to 30, that's going to be a $500 profit just from doing that, but they also gave you $75 up front. So now you've made $575. What happens if it doesn't make it to the $30 strike price or price target by August 30th? Well, what happens is you're going to continue to own the shares that you have purchased, those 100 shares that you own, or even more, and you still get to keep the $75 that they paid you up front. So it's a win-win situation. Now, what happens if it does go to $30 or above? If it goes to $30 or above, your shares are going to sell off at $30. Either way, you get to keep your $75 that they paid you up front, right? Or 75 cents times 100 shares.
Anybody else want to negotiate?
So once again, if you own at 25 and you went from 25 to 30, that's going to be a $500 profit just from doing that, but they also gave you $75 up front. So now you've made $575. What happens if it doesn't make it to the $30 strike price or price target by August 30th? Well, what happens is you're going to continue to own the shares that you have purchased, those 100 shares that you own, or even more, and you still get to keep the $75 that they paid you up front. So it's a win-win situation. Now, what happens if it does go to $30 or above? If it goes to $30 or above, your shares are going to sell off at $30. Either way, you get to keep your $75 that they paid you up front, right? Or 75 cents times 100 shares. Now, how do you do this particular trade? You're going to click on the plus sign right here. And as you can see, it says short call, $30 call, negative 75 cents. Expiration is 8/20. There's a sell. Total credit is going to be 75 cents, right? You can scroll down and it says expected profit and loss is $75, right? That's that right there. 75 cents times 100 shares. Now you have a max profit of $75. That's what they gave you up front. You have a max loss of unlimited, and you have a break even of $30.75, right? So what does it mean by break even? It means that as the price goes up and hits this little white ball right here, right? This little dot, it can go up to that point. That $75 that they gave you is going to be going down in value. Once it hits $30.75, that $75 is going to be your break even point. So the person that you're going to be selling the contract to in the future, they've made their money back. That's all that means, right? So in terms of unlimited, max loss unlimited, does it actually mean that you are losing unlimited amounts of money? The answer is no. And the reason why is because you've already agreed to sell your shares at $30. So once you go above $30.75, let's say you go to $35, that max loss is just the money that you're going to forego having because you said that you would sell at $30, which means that, hey, if the price goes up to 35, anything from 30 to 35, you won't have, right? You won't have that amount of money, right? That's going to be like a $500 difference if you own 100 shares, right? So you wouldn't make that other $500. So that's why it says max loss unlimited, right? It's not about if it goes to zero. So anyway, that's me pretty much showing you guys how to do this cover call trade. And we're going to click on continue right here. And you have short call contracts 1. So one contract equals 100 shares. So obviously, if you own 1,000 shares, you're going to type in 10 contracts times 100 shares is going to be 1,000 shares, right? So, and as you can see, that's going to be a limit price between 70 and 80. That's going to be $75 mid. Expires. It says good for day. Minimum credit is going to be $750, right? So if you own 1,000 shares, they're going to pay you $750 up front today, right? But hey, we don't own 1,000 shares. We don't even own 100 shares. But for those of you who do actually own 100 shares or more, you can do one contract right here. And as you can see, it's going to be a minimum credit of $75. So if you own 100 shares, they'll give you $75 up front today to say that you would sell for $30. As we scroll down, once again, you can see all the chart information. Nothing has changed. And you would just click on review and it will go through, right?
Where did he learn to negotiate like that?
I wonder.
Obviously, the market is not on because it's 7:24 a.m. in the morning. And the market doesn't start until between 9 and 9:30, right? So we have pre-market hours and the market starts at 9:30. Anyway, hopefully I've showed you guys how to do this Azul covered call option and start making money from the shares that you currently own while you wait for the price to continue to go up in value. Or hey, even if it goes down in value, you can still make money from this particular deal, right? So do you have to go with the expiration date of August 20th? The answer is no. Obviously, we have November, January, February, April. So they're going to continue to offer you contracts as the months go on, right? So you can go ahead and do your own research and find out about option contracts and when they actually start popping up, so on and so forth. So you can learn a little bit more about the stuff that you're going to be trading. But obviously, no, August 20th is not the only one. I would advise you to just go ahead and do the August 20th, collect the $75, and then after August 20th is done, and it doesn't make it to the $30 mark, go ahead and move on to the November contract. And as you can see, you may decide to still pick the $30 strike if you want, and they're going to give you $213 up front. Now, is the price still going to be $213 by the time August 20th rolls around? The answer is maybe, maybe not. And what I mean by that is the price of Azul possibly would have went up. So if the price of Azul goes up, this amount is going to change, right? It may be $250, it may be $300. The price of Azul may drop down a little more, which means the price is going to change a little bit more. So you just have to really pay close attention to what's going on to the prices of premium they're going to be paying you as time goes on, right? So once again, hopefully I showed you guys how to execute these covered call option contracts. If you have any questions, please drop them in the comments. I really do appreciate all the love and support that you guys have been giving me on the channel. Hey, if I can do anything to help you when it comes to trading, buying stocks, doing covered call options, cash secure put options, hey, just let me know. You guys have a great day. Enjoy yourselves. Bye.